we've seen this before where there's a big bet placed on a particularly small area in Manhattan. Explain to us whether it worked the last time.
Well, what we saw almost 20 years ago was the same developer, the related companies, built in Columbus Circle in Manhattan, they called the Time Warner Center, and it was built around a luxury mall. Manhattan is not known for accepting malls. In that case, it was very successful, and I think what they're doing is in establishing this new neighborhood or brand called Hudson Yards, is they're trying to create an anchor point for the mixed-use development that's going in there, which is luxury, very high-end condominiums and commercial office space and retail.
They got plenty of tax breaks. To what does that amount, and how much are people paying for real estate here?
Well, actually, and it's interesting that the tax breaks for this development were more than double what Amazon was promised for Long Island City. So we have a bit of inconsistency there with policy from the city, but from a pricing standpoint, this is clearly skewed towards luxury. But for Hudson Yards, this area, you're really looking in the neighborhood of $1,000, $1,500 a foot, which is sort of on the lower half of average, I guess, to put it mildly, in New York. And the new product coming in is $3,000, $4,000 a foot. So it's double, essentially, what the existing housing stock was generating.
Wow.
Jonathan, how big a risk, therefore, are investors into this area making at the moment? If I'm paying, I've heard it could be as high as 6,000 dollars a square foot. The average is 3,000 in New York at the moment. What's the risk?
Well, the risk is that this is essentially a new footprint in this location in the city, but I think some of that risk is mitigated by the fact that the developer has been very successful in doing this in the past. It is a first-time deal, so investors, I think investors, at least so far with steady sales activity, seem to be cognizant of the risk.
How challenging is the market right now?
So the market is essentially softest at the top and tighter as you move lower in price. And most of the new development product that has come in over the last 5 or 6 years has been skewed to the high end. So we're grappling with oversupply. And it's very polarized. You have developments that are moving very quickly at high price points, and you have other developments that aren't moving at all. So it's hard to, it really is on a project by project basis. That's what determines the success.